Hello kind people of YouTube and welcome back to another video. It has been quite a while since we last talked, I am sorry about that. Besides me just having less time in general to do the channel lately, I ran into quite a bit of a cold. I believe it was a flu that pretty much had me out for quite a while. But today I'm not completely better yet, but seeing what is going on in the markets for 2 consecutive days, I just figured I would just need to push out a quick update, even if we don't really know what is going on here yet. But this is a very exciting time, so let's talk about it. As you can see right here, the markets are up absolutely significantly. We see Bitcoin up 7%, Ethereum 8%, XRP 5%, Bitcoin Cash over 50%, Litecoin 30%, we have EOS up 20%, Cardano 20%, Stellar 10%. Pretty much everything that is not a stable coin is up. The only one going down a bit is Binance Coin, but Binance Coin has also gone from I believe $13 to $19 in the last couple days. This is the second day in a row of massive growth for the crypto markets. And right now, everybody's just trying to figure out what is going on. This is an incredibly exciting time with a lot of people already calling that this might be the next bull run. This might be the bull run we have been waiting for. 2 consecutive days of 20% plus growth from a lot of major cryptocurrencies. We see the total market cap at just about $180 billion. Remember late last year when it fell under 200 billion? It has been way below that since then. We are scratching our way back to 200 billion. Bitcoin dominance also falling to just about 50%, meaning that is the kind of thing that we see in bull runs. We see Bitcoin gaining comparatively less compared to altcoins. We see altcoins gaining in importance. That is what we see going on right now. A lot of people speculating this could very well actually be that bull run we have been waiting for. And as I was saying, this Bitcoin dominance dropped from 50.7 to 50.6%. Nice to see. But let's look at some articles that gives us some more of the facts and at least some attempts at an analysis. And this being the second day of significant growth like this, most of these are from yesterday's status. So let's start with this one from Cointelegraph. As always, I will link all of these in the description. Crypto market rally continues with Bitcoin above $4,900. Tech stocks bounce back. Keep in mind, it is now at 5,200 almost. Tuesday, April 2nd, the leading cryptocurrency Bitcoin is holding its gains following a rally last night, with other major cryptocurrency markets registering solid growth as well. So this is essentially where the markets were yesterday, and you can see everything is up significantly again since then. Bitcoin trading at around $4,900, holding ground on the day after it broke the 4,500 price mark for the first time this year. That is how big this is. We broke 4.5 for the first time this year, and now we're almost at 5.2. The coin has gained 17.6% on the day, while its weekly gains are over 22%. Cryptocurrency bull Brian Kelly suggested that the next Bitcoin target is going to be $6,000 and that cryptocurrency market is finding its bottom. Remember $6,000, of course, that number that we've been talking about for quite a while as a significant barrier. Once we are through there, the argument goes, we are definitely in a definitive real bull market. And right now, we are just shooting towards that direction. The second largest cryptocurrency by market cap, Ethereum, is also seeing significant daily gains, up by over 16% at press time. The altcoin is now trading at $164, and as we see here today, $176, another about 7% up. XRP is also up by around 13% over the past 24 hours and is trading at 35 cents. Let's check where that is now, 37. As reported earlier, Switzerland's principal stock exchange, SIX, listed an XRP-based exchange-traded product, claiming that this is the first such product on the market. I'm not sure the correlation is as direct as they're making it sound here. That is just some recent news that we've gotten about it. On the top 20 cryptocurrency list on CoinMarketCap, all the coins are in the green, reporting gains between 0.5 and 44%. I'm going to assume the 0.5% is a stablecoin. Among the top gainers, Bitcoin Cash is seeing the most gains on the day, up over 44% to trade around $242. Bitcoin SV is reporting the second most growth, up over 32% and trading at around 87, while Litecoin has seen an increase by over 25% on the day to trade at 76. Now they don't go into possible reasons why, but I think it's very clear what is happening here. Whenever we emerge into a bull run, a potential bull run like this, whenever there's a lot of movement, a lot of people want something that has a direct relation to Bitcoin. And when you're looking at the major coins, Bitcoin Cash and Bitcoin SV of course carry the Bitcoin name. With that, they get some of Bitcoin's brand reputation, brand recognition, and some of Bitcoin's legitimacy just by association by name. And then Litecoin, of course, has that narrative with it that it is the silver to Bitcoin's gold. So when people see Bitcoin and the crypto markets in general shooting up, a lot of people have this thing where they really want to own a full coin or multiple full coins. And a lot of people will not buy Bitcoin because they don't want to have 0.1 or 0.5, they want full ones. That is of course irrational. It's a completely mental thing. It's just a mental block where you like to see these numbers. But that is a thing that I've heard from many people over the years. So what these people are doing, they get the next best thing. And this isn't a rational process. This is just what has the brand recognition, what looks like it has to do with Bitcoin. So whenever markets shoot up like this, you get a lot of people flowing in who aren't usually in the markets or who have only lightly followed the markets. And they're now flowing in and they're now buying up these cryptocurrencies that they feel are related to Bitcoin in some way. And that is why we see so much movement there. That is what I think is happening here. Anyway, back to the article. Total market cap is around 172 billion as of press time, and as we see here, up almost another 10 billion since. Up from the intra-week low of 137. And that is pretty much all we need. They're just going about the stock markets also doing pretty well. Now let's continue on. Because this article didn't explain anything, didn't even try to come up with explanations, but we have a few attempts here, and first up, one from a Bloomberg analyst: Bitcoin's recent renaissance could be linked to algorithmic trading. And this is one that I did not consider, so it's very nice to have found this article. The recent crypto market jump could be linked to algorithmic trading, Bloomberg writes on Wednesday, April 3rd. Algorithmic trading, a method that uses automated software to detect trends and determine what trades should be made, has been on the rise in the last few months, according to Bloomberg. The industry has seen 17 new algo or quantitative funds launched since September, an amount that purportedly comprises 40% of crypto hedge funds started during this period. So that is really the big new thing happening for the big boy investors with all that money. While crypto funds in general lost around 72% due to the 2018 bear market, these algo funds reported on gains of between 3 and 10% per month during the so-dubbed crypto winter. Bloomberg states that Bitcoin's unexpected 20% surge price on Tuesday, shortly after the Asian markets opened, might have been provoked by a $100 million trade made on 3 major exchanges. As experts told Reuters, a 20,000 Bitcoin order, around $100 million at press time, was spread across United States-based crypto exchanges Coinbase and Kraken, as well as Luxembourg's Bitstamp. Triggered by the giant order, the bots could then start trading, forcing the prices and volumes to rise. Some entrepreneurs quoted by Bloomberg think that algo trading will have a positive impact on the crypto industry. Wei Zhao, CFO of Malta-based crypto exchange Binance, says that they are going to be the new rock stars of the industry. Meanwhile, others fear that algo trading can trigger market manipulation. Travis Kling, founder of the Los Angeles-based crypto hedge fund Ikigai, told... That is a wonderful name, by the way. That is Japanese for... That is a term that's not easily translated, but for the joy of life, the innate value of living. It's a wonderful term. Told Bloomberg that some of them could use fake orders to trick other traders. Bloomberg has issued a series of articles and TV spots citing the possible reasons behind the visible market uprising. For instance, Bloomberg author Eric Lam recalled an April Fool's Day story that claimed that the US Securities and Exchange Commission had finally approved a Bitcoin ETF as possibly affecting the crypto markets. Imagine if that is what happened here. Imagine if this was partially caused by people buying into an April Fool's story. Another reason cited by Bloomberg is the upcoming question of Brexit, as some believe that investors are changing pounds to Bitcoin in the wake of Britain's divorce with the EU. That is actually possible, but you would have to wonder why it would happen around the 2nd of April. Because we have known that Brexit was going to happen for over 2 years now. It has heavily impacted the value of the pound against the euro in particular, but other international currencies as well. It has driven a lot of business out of the UK already. Why would people be trading the money now? If you haven't really been keeping up with Brexit news, Brexit was supposed to happen on the 31st of March, just a couple days ago, but Theresa May, the British Prime Minister, went to the EU, asked for a bit of an extension, a bit of extra time, and they gave her that time. They now have a couple more weeks to figure out how exactly they will leave, because this whole thing, excuse my language, has been a whole big clusterfuck where they don't have a deal lined up for the conditions of actually leaving. So they've been given more time. I don't know why people would start trading their pounds into Bitcoin now. That seems a bit far-fetched. But this the rest of this argument that there was a big trade across multiple exchanges that might have pushed these algorithms into making these trades and then pushing the prices as a whole in a certain direction. I think that's a very interesting point made here, and one that I would have not noticed myself. But we have other potential reasons. And this article, I think, this gives a bit too much credence to technical analysis, but there's still some good points raised in this, so let's talk about it anyways. The crypto market sprang back to life with Bitcoin surge to nearly 5-month highs yesterday. But why? To those who have been paying attention to the charts, it shouldn't come as a surprise, which I'm gonna put a big asterisk next to this. The leading cryptocurrency by market value jumped nearly $1,000 to $5,080 in a 60-minute window early on Tuesday, confirming a transition from bear market to bull market that it had been signaling for some time. Again, it's questionable whether this is already a transition to a bull market or if this is just one of the prerequisites to that. Different people have different standards for when a bull market begins. In fact, after a year-long bear market, savvy traders were waiting on a trend change that would gain credence if and when prices established the most basic of all bullish technical patterns, a higher low and a higher high on its weekly charts. Looking back, a big move was overdue, as Bitcoin's average daily trading range had slipped to 2-year lows in March. An extended period of low volatility often ends up with a violent move on either side. Now this part is absolutely true, and this they're kind of shooting their own argument from just a couple paragraphs earlier here in the foot. Because if this low volatility for a long time is a sign of a violent move on either side, which is something I have said many times before as well, I think to this degree we can say that with confidence about market analysis, then why does it not come as a surprise that the market was going up? This is very much a 50-50 thing if you're going from that perspective. Anyways, back to the article. That low volatility period ended with a strong bullish breakout, possibly due to the following 3 reasons. Number 1, technicals were foreshadowing a bullish move. And this is the one that I'm least confident in, but let's read it anyways. As mentioned, Bitcoin charts have been signaling for some time that a bottom may be in the market. This first began in late February 2019, when we reported that Bitcoin's 50-week moving average dropped below the 100-week moving average, confirming a bearish crossover, the first since April 2015. At the time, we wrote that the lagging indicator had turned bearish for the first time in 4 years, suggesting Bitcoin's price may have bottomed out after a year of declining prices. We wrote, put simply, it takes a great effort on the part of the bears to push the 50-week MA below the 100-week MA. As a result, the bear market is usually exhausted by the time the crossover is confirmed, which seems to be the case with Bitcoin. That, however, was just the beginning. Several longer duration indicators like the weekly money flow index and the moving average convergence divergence, that is a mouthful, would add evidence to the trend. On March 4th, the MFI bottomed, contradicting that much easier term is giving me issues, the lower low in Bitcoin's prices. That bullish divergence is widely considered an early warning of a bearish to bullish trend reversal, a fact we noted at the time. A rising MFI indicates an increase in buying pressure, while a falling MFI is considered a sign of increasing selling pressures. The same day, the MACD, a momentum oscillator calculated by subtracting the longer-term moving average from the shorter-term moving average, also turned bullish, a fact no doubt noticed by traders. So this entire first point here is essentially just them patting themselves on the back. Look, we predicted everything correctly. Now, of course, they're neglecting to quote the articles where they didn't predict this or where they said that that a downward turn was also likely, but let's just ignore that. Here we get to number 2, and this is a more larger scale one, a more long-term one that still was probably in the back of many people's heads, so I think this is much more likely to have an impact here. Mining reward halving. Yet these technical developments likely reinforced expectations of a stronger rally ahead of the incoming halving, a scheduled programmatic reduction in the amount of new Bitcoin paid to miner. Bitcoin is set to undergo a mining reward halving in May of 2020, and historical data indicates the process tends to put a bid under the cryptocurrency at least a year in advance. The protocol automatically reduces new issuance after a certain number of blocks are processed, an event that occurred most recently in 2016. Markets first took note of this possibility in December 2018 after the sell-off ran out of steam near $3,100. The particular price pattern was reminiscent of how the previous bear market had ended at lows near $150 in early January 2015, 17 months before a reward halving in August 2016. Indeed, historical data shows that Bitcoin traders generally respond to the halving and that the event serves as a signal and potential catalyst. Now, I don't think this is at all very strong analysis, because they are not at all showing how this is causation. They are only showing a very, very, very loose correlation. Very loose. If you're pointing at things that happened 17 months before, you need to show some stronger evidence that they're actually related. The narrative that Bitcoin is set to repeat history by breaking into a bull market at least a year ahead of the next mining reward halving has only strengthened over the last 3 months, possibly leading to the bull breakout yesterday. Now, this I think is a more legitimate point to be made here. Once Bitcoin become harder to mine, that of course means more effort, more money needs to be put into creating them, and it also means the supply will be cut in half. And what happens when the supply gets cut in half while demand either stays the same or increases? Prices increase. So we will definitely see some kind of impact on the price. I don't think we can necessarily point at this I don't think we can point as far as 17 months before halving. No, this halving is less than 17 months away. But actually, oh, 15 months. It's 15 months away. But I don't think you can really point that far in advance at these being directly related, but this is definitely something that is in the backs of people's minds as something that is happening in future, and this is one of the underlying reasons anything in the market is happening. And number 3, market activity, and that is pretty much the same that we just read a whole article about. And I'm not going to read their what's ahead thing here because they're going to pretend that they can tell a lot more than they really can for market analysis. Ultimately, what I say every time we talk about this stuff, history doesn't repeat, but history does rhyme. So we will see similar patterns to what we have seen in the past, but anyone who claims to know where exactly the markets are going in the short term is lying to you. So don't pay too much attention to predictions here. Market analysis is much, much better at explaining how we have gotten somewhere than predicting. Hindsight is 2020, of course. And whenever you see articles like this that really we're analysts. This guy has done a lot of market analysis for CoinDesk, where analysts are really patting themselves on the back, like pulling up some of their previous articles and saying, look, I predicted this. They're ignoring the 50 other articles where they predicted something completely different. So always keep that in mind. That is very similar to people who claim to tell the future. They will always point at the one vague prediction that did come true, and they will ignore the 99 that didn't. There's very much reason to believe that market analysis can be helpful, but it's definitely not an exact science. But getting back to the important stuff, we are seeing this absolutely incredible, exciting market movement. Since I started this video, we have gained another billion in the market cap total. That is incredible. Since I started this video, Bitcoin has gone up another % in value, from 5,180 to 5,240. So much exciting stuff happening in the markets right now. This does look like it could potentially be that bull market we have been waiting for. It is definitely a very, very, very strong, explosive 2-day bull run, and right now we have no signs of it stopping. But be careful who you listen to as far as analysis, as far as promising you what is going to happen now. We simply do not know. There are some key resistances that we can be pretty certain are important because these are mental resistances, especially Bitcoin at $6,000. We will find other ones at 8,000 and then a really, really big one at 10,000. These need to be cracked, absolutely, but aside from that, it is hard to make any definitive statements. If this continues for another day or two, I am pretty certain we are in a proper bull market, at least a midterm one, but until then I will not make any definitive statements. I am just enjoying the beauty of seeing this happen, and I hope you guys will too. And with that, that is all I had to say today. As always, thank you so much for watching. If you want to read any of these articles yourself, they will be linked in the description, and I will try to not be gone for weeks at a time again. I can't really make promises like that, but I will do my best to make more videos for you guys, and thanks for watching.